Let's talk about meme stocks. I want to talk about GameStop, but let's start with AMC because AMC seemingly taking advantage of this moment with about $250 million of new equity capital being raised in an at-the-money offering. Walk us through this, because this isn't exactly something that's brand new.
No, exactly, Katie. So you got to step back. This is a company that has struggled with its finances. The whole bear case for the company is the fact that it has a $4.5 billion debt load. It has near-term debt it needs to service. So they've been announcing, and this goes back to the whole ape conversion, ape preferred shares, is finding ways to raise more cash. So an at-the-market offering is one way to do that. They unveiled this back in March, $250 million. Basically, you create shares, your bankers create shares and sell them into the market. They had sold about $125 million of that through the beginning of May. So with yesterday's trading, with trading over the last few days, they are able to finish off and top up the remaining $125 million. But again, $250 million doesn't really get you anywhere near that $4.5 billion figure. And that's why the stock is still down 97% from its all-time highs.
Right. So good perspective there. But I mean, that being said, even though this was announced in March, we've been waiting for this, it feels like they got lucky here.
They did, and that's what one of the things we're trying to see is other companies that are getting caught in some of these short squeezes who have those ATMs on the sidelines probably are calling up bankers saying, hey, we have shares we need to get out and get out the door. And that was one of the interesting things when you compare AMC to GameStop or even go all the way back to Bed Bath & Beyond. GameStop doesn't have debt relative anywhere near to what AMC has, relative to what Bed Bath & Beyond, a number of those other companies had. So that's one thing to keep an eye on. AMC is likely, at least from a fundamental standpoint, to need to do this again. So the questions are, what would they do and what that timing could be like?
So maybe something to keep an eye on if this continues from AMC. But bring me back to GameStop. You made the point, of course, when you take a look at their balance sheet, they don't have the debt load that an AMC has. With that in mind, would it be then surprising for them to maybe try to take advantage in the same way and sell shares?
The sell-side analysts I talk to, on the record and on background, will happily point out the fact that anytime your shares are trading higher, you probably should raise cash. This is a company that does have a good backlog of cash. They do have Ryan Cohen and some of the money managers, management members, at the team being able to put that cash to work however they see fit. That's hotly debated. But when you look at the financial structure of GameStop, when I talk to fundamental investors, they have cash to continue operating. Even though they're losing money, they still can broadly continue to keep going, as opposed to a company like AMC that has to service that debt.
I love that we are talking about fundamentals, actually, when it comes to this meme craze. Let's actually talk about the price action right now, though, because, I mean, GameStop has just been bananas this week, as you know better than anyone else. But is this a short squeeze? Do we think that's what's driving it?
I wouldn't say so, or at least nowhere near the magnitude of 2021. Call it 25% of shares available for trading in GameStop are sold short. 140% is what that number was back in January. We don't see the call option volume that we saw back in January. This is a very different rally, and that was why it was so interesting to see the stock up 150% in pre-market trading, because a lot of retail traders typically are closed off from trading outside of normal market hours, and there's a lot of underlying kind of things at play that early in the morning, whether it's momentum traders or some others that could be getting in and out of the stock. And that's why, again, it's still up 37% today, 130 million shares traded. That's breathtaking. Yeah.
That is, like you said, a staggering amount. A great point that when it comes to the pre-market trading, that's not really the retail crowd that would be playing at those hours. Of course, we were both up watching it, so there you go. But so obviously we've seen this spread. It started with GameStop. It started with Roaring Kitty. Obviously, it's moved over to AMC. Who else is on the watch list when it comes to other meme stocks that we should be keeping an eye on?
See, and this is where we get into a debate on our desk. What do we call a meme stock? I call these two companies meme stocks. Same with Bed Bath & Beyond, because it started with a meme. That was Roaring Kitty posts a meme and continues posting GIFs. There are a lot of heavily shorted stocks. Bed Bath & Beyond is one that comes to mind. A number of EV makers that have seen shares rally. I wouldn't call them meme stocks. And when I talk to investors, even if you're looking at some of the energy renewable names in the solar space that have staged massive rallies over the last few days, high short interest, could be getting squeezed, could be Wall Street buying it, but it's not necessarily a company that's being bought, the ticker's being spread on Reddit or StockTwits, and that's driving it like a typical or atypical meme stock.
Deep philosophical discussions. What is a meme stock? I'm sure it's going to be continue to be redefined.